Welcome back. Well, for the markets, it's still pressure. The advance decline ratio is extremely bleak, around 226 stocks advancing to around 2,069 stocks declining on the National Stock Exchange. But let's shift focus now away from equities and talk about an asset class which has also made massive gains. The Knight Frank Wealth Report of 2024 has ranked Mumbai among the top 10 luxury residential markets in the world. The report has ranked Mumbai at number 8 in their list, while Delhi and Bengaluru occupied 37th and 59th rank on the listing. Well, let's talk a little more about this. We have Gulam Zia of Knight Frank joining in to discuss all this and more. Gulam, hi, welcome to the show. Well, Mumbai has now reached the top 10 in terms of luxury markets. But tell us about the pricing, because as you know, the rankings go up, what is the incremental hike in terms of real estate pricing that we can now see in the Mumbai market? Because there is a high base which comes in as well.
That's true. Actually, to put the things in perspective, the rankings that we're talking about are actually the growth of price itself that we are looking at. We are expecting Mumbai to be the 8th fastest growing market in terms of prices of real estate, luxury real estate, which obviously is led by Manila. Of course, Dubai comes number 3. Mumbai has reached 8th rank, as you spoke about. So this is all about price rise. Well, the price rise that you're talking about is about 7-8% right now. But going forward in next 3 to 4 years, we shall see that continuing. And as you spoke about, even Delhi at 36th position and Bengaluru at 59th position are also coming up pretty fast. So it's all about price right now. While the costliest real estate is still Monaco, Mumbai has a long way to go, but the price rise is the best in top 10, at least as far as Mumbai is concerned.
That's interesting. So, luxury continues to do well. In fact, that's also one of the key findings of your wealth report, that all things luxury doing extremely well. What's also very interesting is that ultra HNIs, people who are defined as someone who would have more than $30 million in assets and liabilities, rather assets mostly, the net worth. 2022, we had around 12,500 HNIs, ultra HNIs that is. 2023, that number swelled to around 13,263. And you believe that this number could go to almost 20,000 by 2028. Once that happens, what's the kind of growth that you're seeing in all the ancillary spaces? And you've also said that AI investment will drive real estate requirements. What does that imply?
Well, your numbers are bang on. As we spoke about in our report, the growth of UHNIs, the ultra high net worth individuals, more than 30 million, as you just explained, this is actually driven by the overall economic growth. While say about 2-3 years back, it was unthinkable to believe that India would be kind of decoupled from what's happening all over the world, recessionary trends in a few of the European countries and Americas and China's 2 to 3% growth. India, the last quarter that we spoke about, 8.4%. And that is exactly the reason. When you have the economy going at that rate, I'm sure the justification is right there. The growth in number of ultra high net worth individuals is also jumping up. As you spoke, in next 5 years, it's going to go up more than 50%. While rest of the world, the rate of growth shall still be about 27 to 28%. India's rate of growth of UHNI is going to be double of that. And of course, as you rightly said, the investment patterns are also very clearly visible. Investment in real estate, the UHNIs that we're talking about, the Indian UHNIs, are going to spend about 32% of their wealth investing in real estate, buying houses in next 12 months. So that's a huge number. And going back to the first question that I was answering, that once again justifies the price rise and the demand for absolutely high-end real estate. The luxury real estate shall continue to be in demand in times to come.
But in terms of delta, Gulam, if somebody is looking to probably buy houses for investment purposes and resale purposes, do you think that Delhi and Bengaluru would probably be more lucrative markets to purchase, say in terms of a price point as well as maybe an upside?
Not really. Actually, I would want to put something in perspective right now. When we're talking about these UHNIs, buying houses, it need not necessarily be for return on investments. It's not about seeing that price growth. The factors that they're looking at, first of all, of course, investment remains one of the reasons, but even very important factor to remember in this category is investment of passion. So real estate is one more investment of passion while they're investing in art, watches, rare wines, whiskeys, precious stones, etc. Similarly, real estate also falls in that category where you're buying, say, if you're talking about an apartment sold in Delhi for 100 crores, which is now very much the same league as Mumbai was. The reason is not just about investment. You're not expecting that those apartments will be sold for, say, 200 crores in 5 to 10 years. Obviously not. But besides the regular 8-9% growth, it's also a lot to do with the display category, the passion category, where you would want the society to know that you acquired something which is that highly placed. So it's not just return on investment, it's also a lot to do about passion.
We do understand that then, there is obviously a high risk out here as well, and understandably it is positioned at the UHNIs itself. But speaking about the UHNIs and, that class of investors, they're also exposed to risk factors such as climate change, etc., which a lot of people might not think of as immediate concerns for their own daily living. How does climate change impact property values, and what sort of new prospects does it present as per your report?
Yeah, well, absolutely. ESG is an important criteria. The UHNIs are focusing on ESG, not just for investment alone, but also because most of them are leaders of their own organizations or their own domains, etc. And putting up the ESG on top of the radar is a key requirement for them. So it's not just about investment, but also about, socially consciousness is also coming into play. And that's where the demand for such houses or real estate, which is ticking all the check boxes as far as ESG is concerned, is also important. And then obviously the values are driven around that. So whether it is the LEED certification or green certification, such properties are in demand and asking for a premium.
Okay, all right, Gulam, we're going to leave it on that note, and we'll probably get into more of a discussion in terms of prices and maybe even the risks to this real estate market soon enough. Thanks very much for joining in and speaking with us. Well, Mangalam, just a couple of days ago, I think there was a pharma promoter from the unlisted space which has bought a bungalow in the city of Mumbai in Juhu for around 101 crores. So that's the kind of real estate we're talking about.
That 1 crore, as they would say, would be shagun. 100 crores is the value, and then 101, just the way we would give 101 rupees back in the day in an envelope.
Absolutely. It's a land parcel, 101 crores shelled out on that. We'll take a short break. On the other side,